welcome to Flagstaff TV. Today we are joined by Andy Clifford, who is a director of PennPetro Energy PLC and president of its wholly owned subsidiary, Nobel Petroleum. Andy, thank you so much for joining us today.
It's a pleasure.
Can you start by telling us a little bit more about PennPetro's activities in Texas?
Yes, PennPetro is operating in Gonzales County in the Texas Gulf Coast, about 2 hours from Houston, where I reside and manage the operations. And PennPetro got involved several years ago in partnership with a company who drilled a well just in the city of Gonzales area before I was involved, and subsequently acquired 100% of the interests. There was a vertical pilot well drilled, which encountered oil, and then a horizontal well sidetracked from that. Unfortunately, the operator had no experience and know-how to drill a horizontal well. They drilled a very good vertical well and logged it. So we saw the potential to take over that well and do further work in the near future. After that, COVID hit, unfortunately, so things kind of ground to a halt. And after COVID, we're gearing up to get active again. We noticed a competing operator was drilling wells just to the south of us, about 2 miles south, just south of the River Guadalupe, and got involved, got interested to share services, that kind of thing, and became friendly with them, and ended up partnering with them and forming a large 250,000 acre AMI, basically covering the whole of Gonzales County for the Austin Chalk, and then participated in a well with them, which we subsequently took over all the interests of and acquired their other interests in some of their other wells there, and that's called the Chalk Talk area. So that's our involvement to date, and we've just worked over the first well and had a successful workover recompletion of that well.
That's a very large site that you have there. Andy, can you tell us a bit more about the team that you have in place?
There's myself. I'm a geologist, geophysicist by background. I've worked, managed public companies and private equity companies before. I'm joined, my VP operations is Dean Pierce, who's got extensive experience internationally, as I do too. And the thing I like about Dean is he's worked for ARCO and EOG and Hunt Oil. Myself, I've worked for Exxon, the Kuwait Oil Company, BHP, and as well as private equity and public equity startups and going concerns. But Dean, for an engineer, brings a very creative, innovative approach to running operations and doing things in a very cost-effective way, but still deploying cutting-edge technology. Now, our efforts are supplemented by consultants, key consultants, for example, marketing, pumper gauges, regulatory permitting, and that kind of thing. So on an as-needs basis. So for the time, we're starting small, keeping the overhead down, and as the company grows, we'll add resources.
And what kind of success have you had at the Chalk Talk 1 well?
Well, the well, we changed the pump, and again, the operator, we don't think did a very optimal job of completing that and the other wells. So we changed out, they had a jet pump in there, and we put in an ESP, very state-of-the-art Halliburton ESP. What's interesting is they monitor the well from Tulsa in Oklahoma, and it's very cutting edge. So we started producing the well about a week ago, and we've been averaging about 100 barrels a day of oil up through this point. In fact, it was a little higher than that yesterday. And so we continue to optimize the production, the pump, and the generator associated with it. We're looking to convert the diesel generator to a gas-fired one using gas from the well. And now we've already planned the next well, which is 1,000 feet away, number 4 well, to do the same thing there.
Looking now at operating costs, can you tell us what the main components have been so far, and how has capital expenditure been compared to expectations?
Well, obviously, two critical things are capital costs and operating costs. The good thing with the capital cost is we came in at practically about half of what the AFE, the authorization for expenditure, was that we put together before. So we're about half the cost for the operation, which is good because it means we can go and do more going forward. And we already have booked the workover rig for the next operation in December. The critical thing for making the wells economic and profitable for all investors are operating costs and keeping that as low as possible. So the critical components are chemicals, which we've got a standby for chemicals, but so far we don't see a need for having the chemicals to separate the oil and water. We've had 4 offloads of oil so far, and very little BS&W, so very, very good quality. The pumper gauges, obviously, local guys who go out and check our wells and other wells once, twice a day, tell us what we've made in terms of oil, gas, water, and so on, and check the equipment. And water disposal. So as you take water away, you've got to handle that water. So one of the things we're looking at all those aspects going forward. It's only just now things are stabilizing, production stabilizing, that we can actually see what the normal every day or every month operating costs are. So we pay our pumpers on a per month basis. But the critical thing is trying to get the cost of the well. If you're on the electric grid, if you're tied into the electric grid, it's going to cost you a lot of money. The next best thing is diesel, but we think we've got enough gas and supplemented with propane to run it more cost effectively and at a lower cost. So they're the critical things. And as we get economies of scale, as we add other wells, we'll be sharing the same facilities, sharing the same costs between multiple wells rather than one. So right now, all the operating costs are hitting the one well. It is very economic. In this environment, in fact, it's very economic down to $30 a barrel too. So, which we're nowhere near. If it does get that low, we're not fracking these wells. We're a very low cost operation with local suppliers, and we're forging great relationships with all the local service companies and getting to know our joining operators too, because you can find out how other operating companies do things, how they market their oil, how they run their operation, what services they use. So we're doing all those things.
Can you tell us a little bit more about the future plans that you have in place?
Well, immediately, we in the next few weeks, we've already contracted the rig to go to the number 4 well, which is 1,000 feet to the north. There's a pad there, the wellhead's there. We can tie it back to the existing facilities. So we aim to do that, change out the pump and put an ESP in, and we hope to get a good well there. There's the legacy COG well north of the river, which we plan to turn our attention to and convert that to, if we can, to a vertical producing well in the Austin Chalk. There's already some facilities there and a pad and good location. So we hope to get to that next after that well. And then the number 5 well, which we participated in and actually drilled and took over the interest, we didn't sufficiently, or the previous operator didn't manage to get all the drilling and completion fluid out of the well. They had a jet pump, which was the wrong pump, we think, for that circumstance. We also don't think the well was optimally steered as well. So we might plan a future sidetrack for that well, but near term, we'll continue to test that well with the right kind of pump and hopefully get some production from that. They're the near-term plans for the immediate wells we have in hand. But we're also exploring a technology, which is a Norwegian technology that some of the majors use, called fish bones, which is a way to, it's not a frack, it's technology. There's also an alternative technology we're evaluating to deploy on a new drill. So if we do end up sidetracking the Western Straits well, or we do a new drill in the COG area, where we have a couple of candidates, we are thinking about deploying this fish bones or alternative technology where we can get frack type rates from wells without actually fracking. And it's, we can get 10 times the production rate. So instead of 100 barrels a day now, we could get potentially 1,000 barrels a day from a well, but not at the cost of a frack either, somewhere between the cost of fracking a well and doing a regular open hole completion. So that's something that's very exciting for us as well.
And where do you go beyond this, Andy?
Well, we have another area we've identified. We call it Trailblazer, and it's a large area with a lot of potential in stacked reservoir objectives, not just Austin chalk. We're negotiating currently, and we could foresee easily 30 or more different candidate prospects to work over existing wells, to drill new wells, to re-enter some wells and things like that. So that's very exciting for us. And that's just very, very close to where we're operating now. And we would do that 100% with, again, I think what differentiates Dean and I and our team from others is the approach we take to being very thorough, knowing how to steer these wells, geosteer these wells. We've both had great experience with that, and deploying the cutting edge technology that the large independents and majors use, but not at high cost, very efficiently and cost effectively. So we're very excited by the opportunities for next year, particularly with this new Trailblazer area.
And finally for today, how about your UK ventures? How are things progressing in Britain?
We've negotiated a farm-in the Horsehill area, as you know, and what excites us about that is it's obviously it's in an area I know very well because I grew up in Surrey and know the area very well. But it has a lot of oil in conventional Portland sandstone and in the Kimmeridge too. Kimmeridge is more of a challenge because obviously no one wants fracking to go on in onshore UK, but there is technologies that we're using and looking at here that we think we could potentially deploy there. But independent of that, you know, what the area needs is a high quality 3D, relatively small 3D, minimal impact, and to identify up to 6 development locations over and above the wells which are already there. So very knowledgeable about that area, very excited by that. And we will see how things progress over the coming months and with the decisions being made in the UK, and very excited about going forward. What's really interesting is the rocks are very, very similar to ones we have in the Texas Gulf Coast, which, as you know, has had hundreds of years of development and production history, and a lot of technologies are deployed here which aren't necessarily deployed in Europe. So very excited by that.
Andy, thank you very much for your time today.
Thank you.
And thank you for watching Flagstaff TV. Can you tell us a little bit more about the future plans that you have in place?